So welcome everyone. It's great to see quite a few familiar faces. My name is Safak Yucel. I'm the Associate Director of our Business of Sustainability Initiative here at the McDonough School at Georgetown University. And I have the distinct pleasure today to have Daniel Sierra joining us for a fireside chat. Before introducing Daniel, I would like to briefly talk about our initiative. And I know most of you are familiar with the initiative. We are trying to do essentially three things as part of the initiative. We are focusing on student learning through our cases, classes. We are focusing on thought leadership. That's essentially the scholarship that we produce here at the McDonough School. And the third pillar is convening and outreach, in which we are joined by industry leaders to discuss matters on business of sustainability. And we have a unique perspective at the initiative. Instead of focusing on the ethical or moral case for sustainability, we are focusing on the business case for sustainability, essentially delivering economic value through higher profit, at the same time investing in sustainability strategies broadly defined. And as part of our convening and outreach efforts, we have the speaker series. And today, it's my distinct pleasure to have Daniel Sierra joining us for our speaker series. So Daniel is the compliance director at Puro.earth. It is a crediting platform for engineered carbon removal. And we're going to talk about what it exactly means, what is the engineering part, what does carbon removal, as opposed to carbon avoidance or reduction in emissions exactly mean. So his role at Puro.earth is to guide suppliers in their entire journey from the initial project idea to the eventual accreditation for their carbon removal credits. In terms of background, he's a lawyer from Universidad Central de Venezuela, and he studied economic regional integration at Pontificia Universidad Javeriana de Colombia, and has a climate change certificate degree from University of Pennsylvania. So please join me in welcoming Daniel to Georgetown.
Thank you very much. Thank you very much.
So Daniel, welcome to Georgetown. And I would like to get started with essentially an origin story. You have an illustrious career. You started with a law degree, and now you are focusing on carbon removal at Puro.earth. So can you tell us a bit more about carbon removal, a bit more about Puro.earth, and your journey, your career journey across different roles in the sustainability space?
Of course. Thank you very much, and thank you for this invitation and for Georgetown University, of course, for you, Safak. For me, it's a pleasure to be here, and let's hopefully help the audience in understanding these issues, and I'm very glad to share this journey and answer questions as much as possible. So a little bit of the origin story. I would say that growing up in Venezuela and starting my law career in Venezuela, you are immediately attached to energy. And as you know, Venezuela, well, the current situation is a very tough situation, but historically has been for over 100 years an oil-producing country. And I started my law career in energy, specifically, in 2005, 20 years ago. And throughout my career, I have been seeing how, the fossil fuel industry is stuck on a story that it's a really complicated story for sustainability. And I wanted to develop the skills that would be able to bridge my knowledge, bridge my experience into the sustainability space. So I joined the Inter-American Development Bank in the year 2019, focusing on energy transition and climate change specifically. And after spending 2 years at the IDB, a couple blocks from here, I realized that the multilateral development system, it's just too slow to be able to make the case for business in the sustainability space. So that's when I decided, at the same time I was doing the climate change certificate program of the University of Pennsylvania, and I really doubled down on carbon removal, because carbon removal allows you to neutralize emissions. So carbon removal is removing carbon directly from the atmosphere through either an engineered process or taking advantage of photosynthesis. And then after capturing CO2, the second and most important part is to sequester it, and sequester it for hundreds or thousands of years. And it is when you have these two mechanisms, the capture of atmospheric CO2 and sequestration for a very long period of time, only then you can have carbon removal. And the key word that carbon removal enables is neutralization of emissions. So the concept of net zero, the net part of the concept is only enabled through carbon removal. You have emissions that you need to neutralize, and that's how you reach net zero. And the Paris Agreement does not talk about a target of absolute zero. It talks about net zero. So carbon removal is embedded in the Paris Agreement, into the logic of the Paris Agreement, and into the logic of the IPCC, the Intergovernmental Panel on Climate Change. And since the year 2018, it has been incredibly, sadly of course, but incredibly clear that only through carbon reductions, so reducing our emissions, we were not going to be able to reach our temperature goals of 1.5 degrees from pre-industrial times, or way below 2 degrees. So carbon removal enables the Paris Agreement, enables the net zero commitments of companies. I'll talk about it a bit more if you want.
Sure. So that's exactly where I wanted to focus, because in our courses and in the industry, there's a lot of focus on avoidance-related offsets. In fact, that's the vast majority of offsets that are available today. Instead of emitting X amounts, I'm going to emit less, and I should be credited for that avoidance. As opposed to Puro.earth, which you have these corks, if I'm pronouncing them right,
yes.
So CO2 removal certificates. Maybe you could expand a bit more on the difference between a carbon offset that comes from, let's say, a forestry project, an avoided deforestation project, or a renewable energy project, as opposed to a cork that can come from various types of different projects. And I want to focus on these different types of projects as well. Totally. So what are the differences between a traditional carbon offset and a carbon offset that Puro.earth issues?
Totally. So the concept of carbon removal involves the physical capture of CO2 from the atmosphere and the sequestration of the CO2 for long periods of time. Carbon avoidance and carbon reductions operate differently. You have a baseline of emissions. Think about your gas stove in your apartment. That has a baseline of emissions. And then you decide that you're going to develop a project because you need climate finance, and now you're going to switch from gas stove to electric. And the emissions of the electricity grid are renewable, so now from the baseline of emissions of your gas stove, now you go down to no emissions or less emissions, and you get credit for the delta.
Difference.
Yes, for the difference. Of course, the difference is that with carbon removal, you're measuring exactly how much CO2 you're capturing and sequestering for the very long periods of time. With carbon avoidance and reductions, you have to model. You are in the world of ideas and projections, and then comes the additionality questions, because a lot of you might already have electricity stoves. How do you call them? Electricity stoves, whatever. Electric stoves. But probably you didn't get them through carbon credits, right? You just got them because you wanted. So why do someone needs the carbon finance to go from gas to electricity? Sometimes you do need it, but sometimes you don't. And when you don't, then you have an additionality problem. And additionality is about the baseline. So you have, you need the credit that you're purchasing to be able to be responsible for the delta in the baseline. If it's not, then you cannot claim attribution that you're responsible for that, and you cannot claim it in your sustainability corporate reporting.
This is particularly because this carbon offset that you're buying is going to be used to offset your emissions as a company. And if you purchasing the carbon offset didn't directly cause someone to reduce their emissions, there's actually no net benefit for the environment, right? So additionality is the most important idea here, that what you're doing actually creates a climate positive impact.
Totally.
Now let's talk about removal.
Yes.
How does removal address this issue?
Yes, and I will connect back to the origin story. I was working at the Inter-American Development Bank, and I was like, development finance is too slow. We need a market-driven mechanism to drive climate action. And carbon markets are the solution for this. But then I went into carbon removal, and Puro.earth, the company I work for, was the first carbon removal standard of engineered carbon removal. Puro.earth is a Finnish-born company that now is owned by NASDAQ. So we're not listed at the NASDAQ stock exchange. NASDAQ is our owner. So what we do is that we are a carbon certification program. So we manage the certification process from writing rules to verifying that the activity occurred, to hiring third-party auditors for them to check on the field that actually the activity occurred, to then issuing the credits and providing the digital infrastructure for companies to be able to purchase these credits from the suppliers that are actually removing the CO2. So we certify the process and we issue the digital assets called CORCs. CORCs stand for Carbon Dioxide Removal Certificate. So these digital assets are purchased by companies such as Microsoft, such as Meta, and I found it funny that you found the exact number of companies that have purchased CORC, and I didn't know it.
Right. 170 corporate buyers, 481 developers.
There you go.
The good thing is all of this is actually publicly available data, because Puro.earth or other registries in the broad carbon offsets marketplace really need to be transparent in terms of how many offsets are issued for one project, who has retired them, because otherwise there could be double counting, for example, right? So going back, Daniel, to this point, so this 170 corporate buyers purchasing from these 481 developers are purchasing from a variety of different removal approaches. So can you tell us maybe a little bit more in terms of, okay, you're certifying these developers for their carbon removal, but they're using different type of approaches in removing carbon from the atmosphere. Can you tell us a bit more about these different approaches?
For sure. And not only there are different approaches, but we have global projects, meaning that we certify projects everywhere. We have projects that we certify in Serbia, in Bolivia, in Brazil, in India. It really is all across the board. So what is the key concept here about removals? Atmospheric sequestration. So you need to have an engineering process that captures CO2 from the atmosphere. And the thing is that CO2 is very diluted. It's difficult to capture. It's 0.04% of the total mass. So there are several ways of doing it, and just for ease of understanding, I would separate them between biological ways, photosynthesis, and then engineering ways such as filters, industrial filters, and and other mechanisms that are strictly technological. So with the photosynthesis, you're taking advantage of the capture process by plants, by biomass in general, and then the engineering part comes into how do you keep this carbon that was captured by photosynthesis sequestered for very long periods of time. So we have two methodologies that address this specific issue. One is called biochar, and it is the main pathway for removals right now, and it basically is turning biomass into a material that is very similar to charcoal, to your charcoal that you use
for grilling.
For grilling, exactly. Right. The difference is that you're not going to burn this charcoal, you're going to bury this charcoal. And the pyrolysis process creates a chemical lock of the carbon atoms inside the charcoal that does not allow the carbon to be decomposed in hundreds of years, and many studies say thousands of years.
So what is exactly biomass?
Yeah, biomass, think about it in terms of plants. The thing is that you also have, for instance, plankton, which is not plants, but you can think of it of biomass. Any living mechanism, but we're focused on plants.
So any plant that is decayed can be converted into biochar.
Yes.
Is that right?
Yes, and some will be more efficient than others because of the water content, because of the difficulty to harvest them. So what most of our suppliers are doing right now is focusing on waste biomass that was left to decay on fields, that was just burned for waste management alternatives. And instead of doing this baseline, which is just immediate decay, our suppliers are intervening and getting this biomass, turning it into biochar and burying it for hundreds of years.
So, for example, we have a large-scale agricultural operation. We collect the crop. There is some residue that is left in the field. The developer comes in, takes that residue, converts it into biochar. Instead of that residue releasing the carbon it already has in itself, we convert it into biochar and bury it, basically, in order to lock the carbon that is already in that residue.
Yes, and you have sustainability constraints in the biomass aspect, meaning that you do not want to diminish the carbon stocks that are in the biomass. You're not going to deforest a field to make biochar.
Right.
But not, I mean, that's an extreme example, but you can even go wrong with agricultural residues because a significant portion of the residues will form soil. And you want these nutrients and the mechanical addition to the soils to be there for future generations. So we have rules around sustainability, limiting the amount of residues that you can get, limiting where you can source your biomass and how you can source your biomass, and this is certified by other verifiers, and we, suppliers need to get these certificates of sustainability, present them to us, and then continue the process.
Very good. So this is one pathway, biochar.
Yes.
Other pathways?
Yeah, I was actually looking at, here in the University of Maryland, there is I would say the leading authority on a pathway that is called biomass burial. Okay. So as it sounds, it's burying wood under a thick layer of a material that does not allow the atmosphere or water to penetrate. And then this wood, when you separate it from the decomposition agents that are in the atmosphere or biological, then it will stay there for thousands of years as well. So you need to engineer a chamber that prevents this penetration of water, air, etc. And after you do that, you need to also source wood sustainably, and in this case it's specifically wood because of the properties of wood that does not allow it to decompose at a faster rate. And even though this process today is very small, we only have a few of suppliers that are certified under this process. the estimations of cost are that this is going to be one of the big pathways.
Interesting.
into the future.
Interesting. This is an interesting pathway. And maybe quickly we can talk about two other pathways that can be familiar for our students. So one is, maybe quickly we can talk about direct air capture,
Yes.
which is kind of science fiction to me,
Yeah.
but I'm curious to hear your thoughts,
Yeah.
and maybe a little bit on enhanced rock weathering as well.
Sure. Direct air capture, just think about huge ventilators that move an incredible amount of air, of atmosphere, through filters. And these filters, they have chemical properties that capture the very diluted CO2 that it's present. The thing is that
0.04%.
Yes.
So less than even 1%. I mean,
It is
1/25 of 1%.
Yeah, so imagine the amount of air that you need to
Circulate
move.
through in order
Yes.
to get.
So, for instance, we are the certifiers of the biggest direct air capture plant and supplier right now that is called Climeworks. They're in Iceland. Probably if you go to Google, you will see the pictures of Climeworks.
Or if you take my course,
Okay.
because we're going to talk about
There you go.
Climeworks in great detail.
Excellent. So the good thing about Climeworks, like why is Climeworks in Iceland? It is because of geothermal energy. It's an unlimited amount of energy that is localized to that point that, it was difficult to take advantage for other reasons because it's, very far out there. So they were, the CO2, interestingly, it's 0.04% everywhere in the planet. It's what is called very well diluted. So it doesn't matter where you capture CO2, it will have the same effect.
Or alternatively, wherever you generate carbon emissions,
Exactly.
it's going to go through the atmosphere anyway.
Yeah.
So it actually allows this idea of trading based on emissions reduction. So this climate science actually facilitates
Yes.
the business side of
Totally.
trading on emissions reduction.
There are
on
no
emissions
borders.
removal. Very true.
Yeah.
Very true. And maybe quickly, because I have so many things that I would love to discuss, and this is a very interesting conversation, especially thank you for shout out to Climeworks, because exactly that's what we're going to talk about in a couple of weeks with my students here. Quickly on enhanced rock weathering, what does it mean? How should we think about it? Pros, cons, potential of it.
Sure. Enhanced rock weathering, or let's put it this way, rock weathering is the way that planet Earth cycles carbon in the very long time of geological cycles. So I was telling Safak that the ice ages are thought to have started when the Everest rose, not the Everest, the Himalayas rose, and with it a bunch of basalt rock that it's very reactive to CO2. So that happened 60 million years ago, and temperatures have been dropping since then. So when you expose minerals such as calcium, magnesium to CO2, CO2 reacts to it, and then it changes chemically. It becomes a different thing. It's not that CO2 is captured by the rocks, it's changed by the rocks. It reacts and becomes a different thing. So this is the most permanent way of removing CO2. The thing is that with the Himalayas and everywhere that this happens, it happens extremely slowly, and only the surface area of the rock is reacting with CO2. But if you crush the rock and you turn it into powder, you're increasing the surface area that these minerals are interacting with. So if you spray it on fields, then you will have, multiplied by several orders of magnitude the reaction capacity. And the modeling of this capture mechanism is it's a difficult thing, MRV.
That's right.
It is tough, but it's clear that this is a very interesting removal path.
Measurement and verification. So essentially trying to calculate how much carbon exactly is removed once I crush the rock and spread it over a great field. So I want to come back to the challenges associated with measurement and verification.
Yes.
But maybe in the interest of time as well, I would like to shift and I would like to think through the demand side a bit as well.
Sure.
So these developers are essentially investing in these various paths to remove carbon from the atmosphere. Companies like Puro.earth, registries like Puro.earth, rely on third-party verifiers to come and check and measure the amount of carbon that is removed. And for each ton of carbon removed, they issue an offset to these developers, and the developers then eventually want to sell these offsets to corporate buyers with net zero targets in order to make profit, basically. And at a registry, you are at a very lucky position because you see the supply side of the market, these developers, but you also see the demand side of the market, these corporations, 170 to be precise, that buy offsets issued by you to these developers. So 2 questions, and I'm curious to hear your broad ideas about these 2 fields. First, Science-Based Targets Initiative, the leading organization for coming up with net zero standards and how to achieve net zero goals. They have recently announced changes to their policies. I'm curious your take on overall this idea of net zero goals of these buyers and how these goals motivate them to source carbon removal. And maybe a second question, and I'll let you time the 2 big questions. This industry is very small. Removal, as opposed to avoidance, is very small. And there are a lot of interesting ways through these buyers are showing interest in these removal offsets. One interesting mechanism that you're a part of as well is this idea of advanced market commitments. Essentially, buyers like Microsoft coming in and promising to purchase via offtake agreements the removal credits that will be issued maybe 5 years, 10 years down the road to signal that they are willing to buy these offsets later on once they reach scale. So I'm curious your thoughts in terms of the recent announcements, the Science-Based Targets Initiative, other initiatives for net zero goals, and your opinions on these recent trends of trying to scale the market through the participation from the demand side.
Sure. So, and this allows me to take a step back and provide a little bit more context. One unfortunate situation that we are all living in is that climate action is voluntary. It's not mandatory. I mean, Europe has a very interesting program of emissions trading, but at the very end, you know, it's not a requirement for companies to assume responsibility for every emission, for every ton of carbon that they emit to the atmosphere. So because of this gap, because of this vacuum in regulation, organizations such as the SBTI
Science-Based Targets Initiative.
Science-Based Target Initiative, which is a combination of several NGOs, the World Resources Institute here in Washington, D.C., WWF, CDP, Women Business Coalition, and the UN Global Climate Impact. They came to fill this vacuum, and they have established rules into how companies can set targets for their net zero commitments. One thing that I would say is that, of course, this process, because it's you know led by voluntary NGOs, has a very academic approach. It's very theoretical as well, and I do think that one of the things that we would and going back to the origin story, we would be better positioned. We would be in a better position if we take advantage of market mechanisms, sustainability as a business, and understanding that this is the way that humans make products. It is through you know the market mechanisms. So I do believe that SBTI, the organization, has an ideological position that limits their view on market-driven mechanisms. And what they want, in a sense, is for companies to do everything they can to reduce their emissions and do not think of any market mechanism outside of their pure controlled value chain. And I understand that point because especially in the history of carbon markets, we have had issues of integrity.
Right.
So it's not coming out of anywhere. I mean, this has happened. But it has happened also because the very nature of avoidance and reduction credits are these projections and you know, you're living in the world of ideas and not in the world of measurements, right? What we believe is that carbon removal offers a very unique possibility that is, you know, transparently measured and everyone can understand what you're issuing in that credit. So SBTI, before this Tuesday, because just 2 days ago they updated the standard, they didn't allow, they prohibited companies to purchase carbon removal credits until they did everything they could to reduce their emissions. And only after they did everything they could, if there were some residual emissions, then you would be able to neutralize them. But that is such a difficult thing, you know, theoretically, like not, I mean, it's in 20 years, it's in 30 years, right? And what the IPCC and the Paris Agreement are clear is that we need removals now, not 30 years from now. So a little bit of the new standard of the new proposal is trying to, you know, set some interim targets, but not, you know, they're not doubling down on the idea. They're still, you know, limiting the possibility of companies to purchase CDR. And we can go into that a bit, but I do think that, you know, we're in the public consultation process, so this can change. But if you know, your program, Georgetown, wants to, you know, commit a very high target on, you know, removing all of the emissions that they have ever issued, such as Microsoft did. This is the pledge, the climate pledge of Microsoft.
They want to be carbon negative.
From their historical emissions, not
emissions.
from the emissions in 20 years, from their historical emissions. SBTI would be against it.
Because there is no way that you can go back in time and reduce those emissions,
Sure.
right? Because they have already happened. But if they were
you
allowed to
can
purchase carbon removal, right,
Yes.
they could account for those initial emissions.
Totally. Yeah.
So I think I am limited in terms of time, but I have a few more questions. So maybe going a little bit over time, because I want to hear, so this was the first part about the Science-Based Targets Initiative. And there is a lot of controversy here. There was a lot of controversy last year as well, by the way, when they were thinking about Scope 3 emissions can be addressed through avoidance offsets or not, which resulted in significant turmoil in their organization. But I want to shift gears a little bit, and I want to also focus on this idea of advanced market commitments and signaling the future need. Again, the challenge is, if you're a company like Microsoft, you want to buy maybe carbon removal, but it simply doesn't exist today.
It doesn't exist.
So then it's almost like a chicken and egg problem that if it were to exist, yes, I would buy it, but for developers, I would invest in R&D if there was a buyer for it. So these offtake agreements, advanced market commitments, can you tell us a bit more about them?
Sure.
And how the most sophisticated buyers in the market today are trying to scale the market?
Totally. And this is a financial mechanism. So it works to provide suppliers with an incentive, or not even an incentive, with something similar to a collateral to go to the bank and present, please give me money to ramp up my production because I have this offtake agreement with these buyers. And it has worked, but of course, as you say, the industry is very small, so it has worked with a few suppliers. So it's not a broad mechanism. The Biden administration, with the Inflation Reduction Act, had a broader mechanism through 45Q,
right.
Which I think, you know.
So that's a subsidy policy, essentially, and a reduction through investment tax credit for particularly direct air capture.
Yes. Yeah. And another
removal
pathways.
removal pathways.
Yes. But of course, that is ending. Actually, all the funds got frozen. So we are back to only voluntary and only corporate-led. So advanced mechanisms, there are a couple of ones. Microsoft has a very unique in-house team that leads this way, and another mechanism is called Frontier, that is a coalition of buyers. You have Stripe, you have Meta, you have Google,
McKinsey, I think.
McKinsey, JP Morgan.
Yes.
And they, create the administrative structure to manage these advanced commitment mechanisms. And you also have it on less permanent removals with a coalition called Symbiosis that works on afforestation, reforestation. But this mechanism, again, imagine you're a supplier that you have access to waste biomass, but you need to purchase the equipment for pyrolysis. You need to, create the whole company to be able to produce this material. And banks just don't believe in carbon removal in general, right? So you need this enforceable contract to access finance at sustainable rates.
And one thing that is really interesting, and that will be a segue to my final question, and then I'll open up the floor for any questions from the audience, is there is actually a very interesting parallel between these idea of offtake agreements for carbon removal and the initial PPAs, power purchase agreements for things like wind. Like 20 years back, when companies like Google came in and promised to purchase electricity generated by wind turbines, actually the developers were able to take these agreements to the banks and, look, my customer is here. Once I make the investment, can you provide me financing for this investment? So interesting parallels, interesting relationship with the growth of renewable energy as well.
Totally.
So I could spend the entire night talking about removal, the details, the supplier side, the demand side. But I'll open up the floor for questions. I do have one quick question, though.
Sure.
That is actually,
the last one.
I'm sorry, but that is my favorite question to ask the speaker who comes to our campus. In the audience, we have our students across different programs, ranging from our undergraduate program to our graduate programs across different fields. And I'm just curious about maybe one or two top-level suggestions, recommendations that you have for aspiring leaders in business of sustainability.
Yeah, sure. So it's not going to be an original advice, but an advice I was given that I really liked, and it is that in life, what is rewarded is action, not intelligence. So go out there, reach out to people, act more than try to analyze behind your computer what could potentially be the most interesting thing to do. So action, I think it's key. And in this space specifically, the space is small. So if you want to work on carbon removal, reach out to me. I'm happy to connect. My email is very easy, Daniel@Puro.earth. So,
Thank you so much.
Send me an email and I'll be happy to continue a conversation.
And after the conversation, through the reception, I'm sure Daniel would entertain any questions that you might have as well. In the interest of the time, maybe we can take a couple questions from the audience. Can we? I'm checking with my boss.
Yes. So, folks, when you ask your question, please stand up, say your name, and then say the program that you're in, please.
Thank you. All right, great.
Hi, Daniel. I'm Akshay. I'm a second-year MBA student, and thank you so much for talking about this subject because I'm very interested in this, and I'm also working in this industry. I'm very curious to learn from your perspective how, and correct me if I'm wrong, so you guys are an accreditation company in a certain way, right? And you are giving credibility to people who are removing carbon from the atmosphere. How is this working as a business model for you guys? How is it working as a business model for, let's say, Microsoft, besides just completing the ESG goals? I'm wondering if there's a dollar amount somewhere.
Who's making money?
Yeah, who's making money, basically. Yeah, thank you so much for
Yes, sure. So, of course, The way we refer to ourselves and to our competitors is carbon crediting program. So we manage the whole certification process from creating the rules to actually verifying that the rules are applied. By the way, that's my specific role as compliance director. I make sure that we are applying our rules. So yeah, it's interesting because I get involved in all the details of rules application. And then we charge for this. So we charge a fee. It's interesting because there is a philosophical discussion of who are we charging it to. We see the deposit coming from the supplier, but we only charge the fee when the credit is transacted. So in a sense, you could say that it indirectly comes from the buyer. But we charge a fee for our service, which is a fixed amount per, basically per cork, per methodology. It's not too complex, but with slight variations. The suppliers, the ones that are actually removing CO2 from the atmosphere, they do have the biggest margin, I would say, because it is the issuance of the credit and the price. This is a market-driven economy, so prices are not set through a percentage of cost. They are set by supply and demand. So, there are suppliers that are getting good margins. There are suppliers that are getting smaller margins, but it depends on where they operate and what is the removal pathway that they're using. But they're making money through selling this digital asset that we issue. And then the buyers, they are not making money. They are paying for this service, and they are paying for it because they committed to do so. And this sounds weird, right? But it's not as weird as it sounds, because all of our interactions, they're legally enforceable. So if I say, I want to, purchase something that you want to sell me, and we agreed, that was a voluntary transaction, but it's enforceable, right? So these companies committed to these targets, and now they need to, to make good on their pledge. So yeah, they are fulfilling their obligations, and that's why they're paying for these credits. To neutralize their emissions, again, which is the key aspect of removals, that it's the neutralization aspect. The only way to reach net zero is to neutralize the emissions that you cannot reduce.
Thank you.
No, sure.
Sorry. Thanks, Daniel. My name is João Basto. I'm first year in executive MBA here. So I was just wondering, how do you protect yourself against controversies on greenwashing, and especially comparing to offsets? Do you think you have a specific opportunity with the capture to better position yourself in transparency? And specific to emerging markets, do you also think that could be a tool that could be more incentivized over that places? Thanks.
Yes, definitely. And again, it goes back to the issue that there is only one atmosphere, so you don't have trade barriers, you don't have tariffs. It's only transaction of digital assets. So it creates a huge opportunity, because wherever you remove CO2, it's going to have the same impact. So one of our biggest suppliers is in Bolivia, for instance. And of course, they're extremely happy to be able to do this. It creates, of course, a lot of extra challenges to do verification in different spaces, but that's on us. So what you're saying on credibility is the key aspect of carbon crediting programs. So these credits are transacted because the buyers believe that the credits are actually representative of what they're claiming, which is a net ton of CO2 removed from the atmosphere. The part of net is key because you need to deduct all the emissions that were required to produce these emissions. So you use electricity, you use transportation, you need to deduct these emissions required to remove 1 ton of CO2. But yeah, credibility, I do not want to say that we do a better job than other carbon crediting programs. What I do want to say is that removals are significantly easier to show that what you're crediting actually happened, because it's measurable. So again, think of the direct air capture company. You just need, one volumetric sensor just to know exactly how much CO2 you're injecting into the underground well. So removals are measurable. Avoidance and reductions, you have a lot of these, argumentation of what would have happened, the counterfactual scenarios, and those are difficult. They're debatable. So a measurement is not really the valor. I mean, of course you can debate it, but you can solve the debate in a more straightforward way.
Very good. Very good.
Okay. I'm Gabriela from the Masters of Environment and Sustainability Management. And my question was about, well, you briefly mentioned that you were at the Inter-American Development Bank. And I think there's like a key role that these global financial institutions are playing in trying to unlock these carbon credit markets, especially in Latin America. For example, the Amazon is a great place for carbon sequestration. So I was wondering, what do you think their role should be in trying to promote these market-based mechanisms?
Sure. And I'm sorry I don't look that way that much because the lights are super bright. 100% agreed. The thing is that, these institutions are conservative by nature. So one of the goals of the multilateral development banks is to keep their AAA rating. So if you want to have a AAA rating, you need to be conservative. You need to not take bold steps. Market-driven dynamics are quite the opposite. Risk is rewarded, right? And some people will fail, and some others will have success. And instead of picking winners, the market mechanism allows you, for companies to be able to raise money and try and see what happens. Our biggest projects are in Latin America, Brazil and Bolivia. And no multilateral development bank participated in the structuring of the mechanism. Do I believe that they can play a better role? Sure, I believe so, having been there, understanding how it works. But I'm not so optimistic that they will, because these are very large institutions with logics that, they're meant to serve governments. And that's fine. I mean, governments need a lot of help, especially in our region. Not all the governments, but most.
Some.
But what I want to get to is that market-driven mechanisms allow you to be faster, to reward risk, and that's what I decided to transition to, right? I hope multilateral development banks are faster and more impactful, and let's hope that will happen.
All right. In terms of questions, maybe we have time for one more question.
Sure.
Anybody else?
I saw one up here in the front row. I figured you should.
Thank you. My question was still more about how this works in emerging markets. So you talked a little bit about Bolivia. I imagine it might be harder to work with biomass that's coming from smallholder farmers in Bolivia or West Africa.
Yes.
I've looked at cacao pod biochar project proposals, but
yes,
I imagine it's a lot harder to work with smallholder farmers than a big farmer in Iowa with corn husks. So how do you make the business case to actually benefit maybe the people that need it most, that have the same valuable biomass as an American farmer?
Sure. It comes down to cost and cost of sourcing. The aggregation of biomass is tough because biomass is very light. So transportation of biomass is super tough. So if you can access especially piles of biomass that were going to be burned, that were just left to decay, that's a huge advantage. Small farmers, the scale for small farmers, I believe we're still not there for very small farmers to be able to propose a project, but they are beneficiaries of these projects. For instance, with biochar has agricultural properties, and these companies are subsidizing the biochar into the small farmers because they're interested in bearing the biochar, and this is a difficult process. I mean, not difficult, but it's costly. and farmers are interested in having free soil amendment. So this is happening. We expect for this to continue, and then eventually, either slowly or at an accelerated pace, if someone goes into it, I do expect a lot more integration of biomass sources from small farmer holders into these projects for them to also be part of the project, not only as beneficiaries, but as suppliers of the project.
Very good. I think we had a few more questions, but in the interest of time, maybe we can do the following. Those of you who have questions and everybody else can come to the podium, have a one-on-one conversation with Daniel. I'm sure we have a lot more questions that we can ask Daniel. We have another half an hour or so for the room that we can use, I think. We have some refreshments that we can enjoy. But before we do all these great things, please join me in once more thanking Daniel for great insights on carbon removal. Thank you so much for coming.